Big news from the U.S. Federal Reserve. The Fed has just announced a 25 basis point rate cut, a move that will ripple across global markets, mortgages, credit cards, and your portfolio. But why now? What does this mean? And what comes next? Let's break it down. After weeks of speculation and market buildup, the Federal Reserve has made its move, officially cutting interest rates by 25 basis points, or 0.25%. This brings the federal funds target rate down to a new range of insert accurate range if needed, e.g. 5.00% to 5.25%, marking the first cut since insert previous rate cut date, or say the first cut in over a year if true. The decision came at the end of the Federal Open Market Committee's two-day meeting, with the vote passing by a strong majority. The Fed said in its statement, recent indicators suggest that economic activity has been expanding at a moderate pace, but risks to the outlook remain. So why has the Fed decided to pull the trigger now? There are a few key reasons. Slowing inflation. After months of aggressive hikes to fight inflation, the Fed is now seeing cooling price pressures, particularly in housing, energy, and some core goods. Labor market softening. Job growth is still positive, but wage gains have cooled, and unemployment has ticked slightly higher in recent reports. Consumer pressure, credit card delinquencies are rising, mortgage demand has fallen, and household debt is at record highs. Higher borrowing costs have started to bite. Global uncertainty, from slower growth in China to ongoing geopolitical risks. External factors are weighing on sentiment, and the Fed doesn't operate in a vacuum. This 25 basis point cut is seen by many analysts as a policy recalibration, a shift from restrictive territory to something more neutral as the Fed tries to guide the economy to a soft landing. As expected, markets were quick to react. Stocks. The S&P 500 and NASDAQ jumped in the minutes following the announcement. Investors love lower rates. They reduce borrowing costs and tend to boost risk assets like equities. The dollar. The US dollar dipped slightly against other major currencies. Rate cuts typically weaken the dollar as returns on US assets become slightly less attractive. Bonds. Yields on US Treasuries slipped, especially on the short end of the curve. Lower yields reflect expectations of more easing ahead. Housing. Mortgage rates may soften slightly if bond yields continue to decline. Welcome news for homebuyers in the real estate market. But markets are split on whether this is a one-and-done move or the start of a full-blown easing cycle. The most important part of any Fed meeting isn't just what they do, it's what they say they'll do next. Fed Chair Jerome Powell struck a careful tone in the post-decision press conference. He said, "We are prepared to adjust the stance of monetary policy as appropriate should risks emerge that could impede the attainment of our goals." Translation? They're watching closely and willing to do more cuts if needed, but they're also not committing to anything. The Fed is in full data-dependent mode, meaning they'll be guided by inflation reports, job numbers, and economic data in the weeks ahead. Okay, what does this mean in the real world? Mortgage holders. If you have a variable rate mortgage, you could see your monthly payments decrease slightly. If you're in the market for a fixed rate mortgage, there may be some relief ahead. Credit cards and loans. Most credit cards and personal loans are tied to short-term rates. A Fed cut could mean a slightly lower interest rate on your balances, but don't expect major changes overnight. Investors. Rate cuts can boost stock market valuations, especially in tech and growth sectors. But if cuts are happening because of economic weakness, there could still be volatility ahead. Savers. Bad news here. High-yield savings accounts and CDS may start to lower rates again, meaning less income for savers. So, is this the start of a full pivot? Some believe more cuts are coming. Others argue this could be a strategic pause before holding rates steady through the rest of the year. Wall Street is currently pricing in at least one more rate cut this year, but it all depends on the next few inflation and jobs reports. Expect volatility, expect debate, and expect markets to react to every data point between now and the Fed's next move. The Fed just cut interest rates by 25 basis points, and the financial world is paying attention. Whether you're a trader, a homeowner, a business owner, or just managing your budget, what the Fed does matters. We'll keep watching the data. We'll keep watching the Fed. And we'll keep bringing you the breakdowns. Like this video if you found it useful, subscribe and drop your thoughts in the comments. Was this the right move? Thanks for watching.